Have you ever wondered who makes the stock market tick? Well, it's not just a handful of Wall Street tycoons or some supercomputers predicting the future. The stock market is a complex ecosystem teeming with a myriad of players, all performing their unique roles. Understanding these functionaries and their distinct roles is crucial for anyone looking to navigate the turbulent waters of the stock market. First off, have the brokers, the quintessential middlemen of the stock market. They act as the conduit between investors and the stock exchange, facilitating the buying and selling of securities. Brokers are the ones who take your investment dreams and turn them into reality. Then we have the sub-brokers, who function under the primary brokers. Sub-brokers assist in extending the reach of the brokerage services to a larger audience, often acting as the first point of contact for retail investors. Next in line are the jobbers, also known as the market makers. Jobbers keep the market liquid by buying and selling securities, often holding them for a very short period. They are the matchmakers of the stock market, ensuring there's always a buyer for every seller, and vice versa. Then we have the consultants, the guiding lights in the often murky world of stocks and shares. Consultants provide valuable advice to investors based on thorough research and analysis. They help investors understand the risk and return potential of different investment options, aiding in informed decision-making. Last but not least, we have the institutional investors. These are the heavyweights of the stock market, consisting of entities like mutual funds, pension funds, and insurance companies. They manage large volumes of securities and have a significant influence on market trends. In the stock market, every player, big or small, plays a vital role. They're all cogs in the intricate machine that is the stock market. The next few minutes we will delve deeper into each of these functionaries, starting with brokers. Brokers are the unsung heroes of the stock market. These are the individuals who play a pivotal role in the grand orchestra that is the stock market. They are the intermediaries, the middlemen, bridging the gap between buyers and sellers, making the magic of trading happen. Brokers have a rather intricate and multifaceted role. They are the conductors, ensuring that the symphony of buying and selling plays out seamlessly. They execute trades on behalf of clients, be they individuals or corporations. When a client wishes to buy a particular stock, it's the broker who places the order and ensures its execution. Conversely, when a client wants to sell, the broker is again at the helm, managing the transaction. But their responsibilities extend beyond mere transactional duties. Brokers are also advisors, guiding their clients through the labyrinth of financial markets. They provide investment advice, helping clients make informed decisions about where to place their hard-earned money. They analyze market trends, evaluate financial reports, and assess economic indicators to offer the best possible counsel. They are the compasses in the often tumultuous sea of the stock market. Moreover, brokers shoulder a significant responsibility in ensuring regulatory compliance. They are the guardians at the gate, ensuring that the rules and regulations of the stock market are adhered to. They check the legitimacy of transactions, prevent fraudulent activities, and ensure that their clients' actions are in line with the law. In essence, they serve as a protective shield, safeguarding the integrity of the market. Through their tireless efforts, brokers help maintain a fair, orderly, and efficient market. They facilitate the smooth flow of capital, driving economic growth and prosperity. They are the unsung heroes indeed, orchestrating the complex dance of the stock market with aplomb. Now that we understand brokers, let's move on to their close allies, sub-brokers. These are another set of important functionaries in the stock market, whose role we'll delve into in the next scene. So stay tuned as we continue our journey through the fascinating world of stock exchange functionaries. Sub-brokers might seem secondary, but their role is just as crucial. They operate as the right-hand men and women to the main brokers, functioning as their assistants in the bustling world of stock exchanges. Now you might be wondering, what exactly do these sub-brokers do? Well, they are the ones who grease the wheels of the trading machine. They help brokers execute trades, ensuring that every order is placed accurately and on time. But their responsibilities don't stop there. Sub-brokers are also the relationship managers, managing the interaction between brokers and their clients. They ensure that the clients are informed, satisfied, and their needs are being met. Moreover, they play a significant role in compliance. They help brokers navigate the complex labyrinth of market regulations, ensuring that every transaction is above board and within the legal boundaries. Without sub-brokers, the trading process would be far more challenging. Next, we will explore the world of jobbers, the market's matchmakers. Jobbers are the unseen forces that help maintain market liquidity. Now you might be wondering, who are these mystical figures? Jobbers, dear listeners, are the silent matchmakers of the stock market. They operate behind the scenes, buying and selling securities on their own account. Their primary role? To maintain market liquidity. In the grand theater of the stock market, think of jobbers as the backstage crew. They ensure that the show goes on smoothly without any hiccups. They do this by taking on the risk of holding securities in their own accounts, ready to buy or sell at a moment's notice. This way, they ensure that there's always a buyer or seller available, thereby maintaining the liquidity of the market. Now, maintaining liquidity is not their only role. Jobbers also have an uncanny knack for identifying trading opportunities. They have their fingers on the market's pulse, identifying trends and capitalizing on them. By doing so, they not only profit themselves but also help in rectifying price imbalances in the market. In essence, jobbers facilitate market efficiency. Without them, trading could become a sluggish process, and prices could swing wildly due to a lack of buyers or sellers. To sum it up, jobbers are the invisible conductors orchestrating the symphony of buy and sell orders, ensuring the market remains a well-tuned machine. On to our next functionary, consultants, the guiding lights of the stock market. Consultants are the compass guiding investors through the stock market jungle. They are the navigators who help investors find their way in an often perplexing maze of numbers, trends, and market indicators. In the stock market, the role of consultants is as diverse as it is important. They are the ones who provide expert advice to investors, helping them decipher the complex language of the stock market, enabling them to make informed decisions. They are like the stock market's interpreters, translating the market's cryptic signals into a language that investors can understand. Their responsibilities don't stop there. Consultants conduct rigorous market research, sifting through the vast oceans of data to identify potential opportunities and risks. They use this knowledge to develop comprehensive investment strategies that align with the investor's financial goals and risk tolerance. In addition to this, consultants also advise on portfolio management. They help investors build a diversified portfolio that can weather the market's ups and downs, providing a steady hand in times of volatility. They monitor the performance of the portfolio, making necessary adjustments to ensure it stays on track to meet the investor's objectives. In essence, consultants are the guiding lights in the stock market, illuminating the path to financial success for investors. Their expertise, along with their ability to navigate the intricacies of the market, makes them an indispensable part of the stock market ecosystem. Finally, let's talk about the heavyweights of the stock market: institutional investors. Institutional investors are the giants whose moves shape the market. These market heavyweights are the likes of pension funds, mutual funds, insurance companies, and banks. They're the big players dealing in vast sums of money, often in the billions. Their financial clout is such that their investment decisions can determine market trends and influence stock prices. Institutional investors are not just passive observers in the stock market, they are active participants. They employ a variety of investment strategies to increase their returns and mitigate risks. Some may favor a long-term buy-and-hold strategy, while others might engage in high-frequency trading. Some may focus on blue-chip stocks, while others might be attracted to the potential high returns of small-cap stocks. Their strategies can often dictate the ebb and flow of the market. For instance, when institutional investors start buying into a particular stock, it can trigger a bull run, pushing up the stock price. Conversely, when they start selling off their holdings, it can cause a bear market, leading to a drop in the stock price. But it's not just about influencing market trends. Institutional investors also play a key role in maintaining market liquidity and stability. With their large-scale transactions, they ensure there's always a buyer or seller on the other side of a trade, providing liquidity. This in turn promotes stability as it reduces the likelihood of sudden price swings caused by a lack of buyers or sellers. However, their influence also comes with a responsibility. Given their significant impact on the market, it's crucial that their actions are transparent and in line with market rules and regulations. This is to ensure that all market participants, big or small, are on a level playing field. In this dynamic world of the stock market, understanding the role and influence of these institutional investors is crucial. They are the market's heavyweights, whose moves can make or break market trends. Understanding these functionaries is the first step towards mastering the stock market.